Good afternoon, everyone. Welcome to the 17th Quality Cafe session, where we aim to foster insightful discussion and share valuable insights on enhancing our work's quality. Today's session promised to be enriching as we delve into various aspects of quality improvement within our topic for the same is using the work of others way to effective audit processes. So without further ado, I would like to hand over to CA Vishal Doshi sir, convener CAQD, whose vision and guidance have been instrumental in driving our commitment to excellence. Over to you, sir.
Thank you, Karunaji, and a very good afternoon to all our participants who have joined online on this Monday afternoon. I know Monday is always tough for people to spare time, but I believe it's the panelists who have attracted today the audience to this afternoon webinar. I am extremely happy to welcome our past president, sir, CA Nilesh Vikamseji, our other panelists, CA Biswaranjan Sutarji and CA Shweta Shingalji. Welcome to all of you to this 17th Quality Cafe session. And this is a virtual series that is dedicated to audit quality. And the topic for today's session is using the work of others way to effective audit processes. Friends, we have a whole series of standards, I would say, the SA 600 series, which we normally refer to as using the work of the other auditors, the internal auditors, the experts. And these are the standards which are equally important as any other standard, because many times I come across or interact with friends who say that, consolidation is not applicable and therefore this series is not applicable. And that is why we thought that this is an area where we need to highlight that these are the standards which we need to follow. And this actually helps the whole process of audit with respect to the SS 600, 610 and the 620. The SS 600, friends, it outlines the responsibility upon the principal auditor when using the work of another auditor. The SS 610, on the other hand, it emphasizes the critical aspects of utilizing the work of internal auditors, emphasizing the need for in-depth evaluation and integration of their findings. And the SS 620, the third standard in the series, it guides the auditors in effectively utilizing the work of experts, reinforcing the significance of thorough assessment and validation of expert opinions within the audit process. To guide us through these three set of standards, we have three stalwarts of our profession who have got tons of experience behind them, not only of these three standards, but audit practice or service as a whole. I would like to now share some of the initiatives of the Center for Audit Quality Directorate. So we have launched a lot of publications and Excel utilities for the benefit of members. These include the utility for determining materiality. Materiality, as I always mention, that in our opinion paragraph, we say that the financial statements are free from material misstatement. And therefore, it becomes very important to quantify and document the materiality and to help our professionals in documenting this materiality threshold. The Center for Audit Quality Directorate has come out with an Excel utility for determining the materiality. Last year, we had launched the utility for the bank branch audit, which has a dashboard for monitoring the bank audit progress and also complying with the audit procedures listed as in the guidance note. So in fact, I would say that was the first utility that we had released, and now it's time again. Friends, just yesterday, the AASB, the Auditing and Assurance Standard Board, has released the exposure draft for the guidance note on the bank audits, the 2024 edition. And I would request, also being the vice chairman of the AASB, I would request you to please go through it and respond to the guidance note, the exposure draft, so that your suggestions can also be deliberated and incorporated in the guidance note. And once the guidance note as approved by the council is released, we will again come out with the Excel utility 24 bank branch audit. In fact, I'm happy to share that the last launch, we had more than 10,000 downloads of this utility on the bank branch audit. And coming to a very important utility, which is the last in the line, was the utility on engagement letters, where it simplifies the process of generating engagement letters for the clients. In fact, it is a macro-based tool or a utility that has been prepared and uploaded, where on a single click, if you want, you can generate 25, 30, 50, 100 engagement letters also. That Excel is integrated with the Word. And I am happy to share that also has got a very wide acceptability, and we have got more than 7,000 downloads of that also. And this engagement letter utility has been prepared for 5 templates, or for 5 types of clients, I would say, or assurances: Form 3CA, Form 3CB, listed companies, unlisted companies with IFC, where internal financial control reporting is required, and unlisted companies without IFC. So these are the 5 templates where Excel integrates into that, and you can generate it. So these are some of the utilities in the last 1 year that we have prepared and released for the benefit of the fraternity and membership at large. Coming back to today's discussion, friends, this is an opportunity, I would say, to delve into practical insights, share experiences, and discover actionable strategies in the spirit of collaborative auditing. I thank you all for joining this session, and thanks to Nilesh Bhai, Biswaranjan ji, Shweta ji for giving their valuable time to us. And where in this Quality Cafe series, typically we discuss, so it is not a presentation, but more of like a panel discussion, an interactive session, where we try to answer or respond to the queries or the qualitative aspects of audit that are there. So once again, thank you all for joining this session. And now let's explore how using the work of others and adherence to the standards on audit pave the way for more effective and robust audit process. Thank you. Thank you very much. Over to you, Karuna ji.
So we have started and we have received many queries since inception. So just giving a brief about our experts in panel. CA Nilesh Vikram says, sir, who is past president 2017-18 and fellow member of ICI since 1985. He's independent director in listed entities, experience for more than 37 years in accounting industry, skilled professional in consultancy and advisory management, statutory audit and risk management. Presently, he is chairperson of National BFSI Committee for the Indo-American Chamber of Commerce, vice president of West India Council, Indo-American Chamber of Commerce, and member of subgroup for revision of Volume 1 of Code of Ethics, Advisory Committee on Mutual Fund of SEBI, Core Group of BCAs, Advisory Board of Black Soil Group. So he's very, very learned member. So our experts are so learned that our participants will definitely be getting enriching their knowledge, and their queries will be resolved surely. Our next panelist is CA Biswaranjan Sitarji. He is a fellow member of ICI and alumna of IIM Calcutta, currently working in the area of assurance and advisory with over 20 plus years of experience in these fields. And we have another panelist, she is Shweta Singhal ji. She is a trailblazer and first female partner of one of the industry's leading audit firm with an impressive career spanning over 12 years. She has emerged in the field specializing in statutory audit, risk management, and handling special regulatory assignment within the dynamic BFSI segment. Throughout her distinguished career, Shweta ji has on her expertise in various facets of financial industry, concentrating particularly on the banking, NBFCs, mutual funds, and general insurance sector. As a seasoned professional, she brings a wealth of knowledge and strategic insight to her role, consistently contributing to the growth and success of the organization she collaborates with. So we welcome our eminent panelists, experts, and moving towards the session. And over to you, sir.
Yeah, thank you, Karuna ji. So I know everybody is eager to hear Nilesh Bhai. So my first question to Nilesh Bhai, or I would say his opening remarks, not just a question, and opening a warm-up thing from his side. Sir, ethical considerations related to utilizing the work of others in audit processes, emphasizing integrity, confidentiality, and compliance with ethical guidelines. Can you, sir, throw some light on these issues?
Yeah, thank you. First of all, Vishal, thanks a lot for the fantastic initiative you have taken up in the Center of Audit Quality. And this is the 17th Quality Cafe session which you have done. And just believe me, Vishal, yesterday I was at the Ghatkopar Study Circle and there was a session on Code of Ethics which I was chairing. And my culminating remarks there was, if the profession today has to, sort of go to the next level, the only words which you need to focus on is audit quality, is quality, quality, and quality. So we are talking audit quality, but not necessarily only audit quality. If we are doing tax work, the quality in the tax work, the quality in the GST work, the times have changed completely from the earlier, period when we were there. So my heartiest compliments to you for, focusing on quality and the fact that you started the Center of Audit Quality. Coming to the other work which you're doing, publications, Excel utilities, again, hats off. Fantastic. Today, the members cannot say that there's not enough support. I don't think any other organization in the world is giving as much input, support, material, or to equip the members to the extent possible, best extent possible, and doing more and more, and not less and less. It is evolving. From the time I was there, it has gone shades ahead in the sense from whatever we were doing then, 5-6 years back. So compliment. Just a couple of things before I get into the question specific. One is you mentioned that, SA 600, 610, 620 members are saying that it is not applicable in case of small entities. That's fine. I'm on the reference group of a new standard which is coming up internationally, which is the auditing standard for less complex entities. What's happening is at the IAASB level, they are coming out with a separate set of auditing standards for less complex entity. And there, during discussions, I had given a pushback that we want to make it, the standard also less complex. Not only for less complex, the standard should be, currently the way the standards of auditing are there. There are many matters where there are different interpretations possible. The volume is huge, for applicability to the smaller entities. To listed companies, large entities, this application acceptable, but for smaller entities. So what happened there, just a case in point I want to discuss is, there was an initial feedback by the group which was drafting the standard that we should have the standards pertaining to consolidation even in the auditing standards for LCEs. If I'll just use the acronym, less complex entity. And then I gave a pushback. I said, we want to make the standards also less complex. Why do we, and I was giving the Indian perspective, why do we want to, the smaller entities don't have the holding subsidiary or branches or the, associate, joint ventures, etc. Why do we burden, assuming it's a very few, some of them have, so let them apply the larger standards. Why are you, burdening the less complex entity standard with them? So after some resistance in the group, it was accepted. It went up to the IAASB. They also accepted, but then I think later on there was pressure from, I believe, US. In US, there are smaller entities which also have this holdco subsidiary concept. And because of that, this again came back into the mainstream. And, it's not a very happy sign, but even the consumer standards are going to be part of the LCC. So one will have to read more, one will have to apply more to this extent. So that is one. And before again going into the question specific which you asked, a little bit background and history of this whole standard. I think as all of us know, the participants, SA 600 is the only standard which is not following the international standards of auditing, ISA 600 as we call it. The ISA 600 is consideration in group audit, and we have SA 600. The reason for the difference, friends, because I was part of the AASB as a corporate member way back in, I think, around about 2008 or 7, I don't remember the year, when ISA 600 came. I think ISA 600 came on the backs of the Parmalat scam, if my memory serves me right, where an Italian company had some operations in Asia, and there's some challenges on the bank balances, etc. Using the work of Audit, they had some challenges. And then ISA 600 says a group auditor will be responsible for the work of a component auditor. So this came up for discussion AASB. At that time, AASB, I was a corporate member, also cleared it despite some objections raised by me as a member that this will be not suitable to the Indian conditions or the situations. And later on, I think possibly in the good wisdom of the then council, they also didn't approve the particular, replica of the ISA 600 being brought in, because in India, and we are internationally, what was seen earlier, we can't rely on the work of the other auditor. If he's a chartered accountant in India, if it is there, or an equivalent, degree abroad. So that was, the trend. And then based on debate that in India, we have got a huge, uh, area where we have got branch auditors, we have got joint auditors, we have got, different subsidiaries being audited for different things. So if this standard came in that a group auditor will be responsible for the work of the, component, there will be a lot of consolidation. Currently, everybody coexists peacefully. And that's the reason this standard was not adopted. And based on experience gained, in fact, I was having a discussion with Mr. Ajay Behel, who's a chartered accountant member who's now a practicing advocate in GLOPAC, which we had a global conference at Ahmedabad last month. And I had a detailed chat of about an hour or so with him. Luckily, I got him over breakfast. And first time I had such a detail. I never had the occasion to interact with him earlier. And he's a CA and advocate, and he's, I think, representing a lot of the larger firms in various matters pertaining to the profession. And even in a generic sense, you're saying that it's not essential that we follow all the international, whether it's accounting standards or IFRS or, I would say auditing standards. We have to see the suitability. We may adopt something after some years, depending on the readiness of the Indian scenario. So that I would request you, Vishal, as the vice chairman of the AASB. And what has happened is over a period of time, the amount of this rate and speed at which the standards are coming into being, I believe there is, a challenge in the sense, the enough time, I don't know whether we do review this in the AASB, we review in the groups and all, but the impact analysis, how the standard could impact, either the profession or the industry, I think that we need to see. And having said that, even in IFRS, if you are, as you all of you may be aware, that we have got 5 to 6 small differences vis-a-vis the IFRS in the Ind AS. And that was very thought after and debated. And I think we are the 5th largest economy in the world, and we'll be the top 3. And I think we should have that in us, and wherever required. And now you are, I think, part of the international board also, Vishal, IAASB. So number one, of course, through you, the Indian view will go there. But let's have the courage from a timing perspective. Certain things is not suitable. We should maybe review the existing this thing also, and especially on the standards of auditing where there are a lot of interpretational challenges. Where 3 of us sitting down, we 3 may have different interpretation of 5 of us. So I think we need to sort of try to simplify it, even if the language is different. So just think through it. I'm just giving a food for thought. Coming to the issue of the integrity and ethical considerations in group audit. Now I come to the standard specific. So I'm saying, let's find a way out. So ISA 600 is different, SA 600 is different. And today, luckily, we are going to discuss SA 600 and what are the challenges we are facing. And I'm sure this discussion will throw some light on way forward, what are the issues and how do we address it. So one of them is the ethical issue. I think in my practical experience of my colleagues and all, one largest challenge which we are seeing, which is applicable to a normal audit also, forget in a listed entity, is what happens is you're doing, say, the holding company as a principal auditor, and somebody else is doing the component auditor, which is very prevalent in the BFSI sector thanks to the RBI, norms of audit appointment. And there's a large material subsidiary. And so those results come 1 day or say 2 days in advance before the board meeting of the holdco happens, where assuming you're the principal auditor of the holdco. So how do you sort of safeguard the information which is coming in? How do you know what is the team composition which is there? Of course, this equally applies to, I would say, the audit which you're doing of a listed company. There also this UPSI, unpublished price sensitive information. How do we handle that? How many people should be having so that is a very critical consideration, ethical consideration, even in a group audit. The information flow coming, how do you handle that? How do you, at the end, especially the numbers. So that is one thing which comes to my mind as far as the ethical condition. Other than that, on the independence, on the integrity, I think the norms remain same. Yeah, there is a little bit of a challenge. The principal auditor cannot get into the integrity issues of he can look at the technical side of the audits done through a lot of questionnaires, etc. But this is one area where I think you trust the firms who are doing that, and based on the questionnaires which you send and the response you get, I think you need to assess what is the quality of that is on the quality of the audit. But I agree there could be a slight issue on the we don't have a mechanism to review the integrity or ethics of the component auditors, if I can say so. But having said that, I think the challenge which comes up is the appointment of the component auditor, assuming they had some, I would say connection with the erstwhile advisors or consultants, whatever companies like norms are within, when can you be appointed as an auditor? So there are some gray areas around that. I think that needs to be tightened. In case of a subsidiary auditor, the appointments of a person who's a consultant and then taking up audit, maybe that person has moved out of the audit firm. So there has to be some cooling period before the appointment. Otherwise, there could be some, I would say, question mark on independence. I'm not saying it necessarily will be, but there could be. So this is something which I would share. Sorry, I've taken more time, which was allocated to me, but I just wanted to sort of set the tone and base for this meeting. Thank you.
Thank you, Nilesh bhai. In fact, let me be honest, sir. For you, sir, time is never a limit, never a constraint, because everybody is pretty eager to listen to you, your words of wisdom, as well as the experience that you share. And you touched upon some very important aspects and the developments that are happening internationally on the standard on the less complex entities. And I remember I had represented the AASB last year, where you had also guided me on some of the matters that had to be discussed, and the India stand at the group meeting of the LC. And sir, you very importantly also touched on the ISAs and the IFRSs and the carve-outs that we have in India, or maybe some of the standards not being adopted as it is. And we would definitely, sir, at the board and at the council, would always keep the Indian practice and the Indian I would say circumstances, because so like I remember you also had told me once that the applicability of audits itself, there is a big vast difference internationally or globally and what is there in India. And this, during my interaction in that meeting also, was very much evident. So thank you, Nilesh bhai, for touching upon these aspects and also the ethical considerations. Coming to Biswaranjan ji for his opening remarks. Sir, can you just share something about the methods for validating and assessing the risks that are associated with incorporating the work of others into the audit processes to maintain integrity and accuracy?
Yeah. Thank you, Visalji, for bringing me in to the discussion. Before I touch upon the specific question, let me compliment to the effort what CAQ is doing. This is based on the ground reality check. I happens to travel smaller cities. In fact, yesterday I was a very small city, and tomorrow I am traveling to a few of the branches. And the kind of response that they have shown to the CAQ efforts is phenomenal. And the first time they feel that there is some productivity is coming in through micro deliveries, because a lot of time through seminars and CP programs, we lose out on the content part, looking at the macro point of view. But what CAQ is doing is first time is addressing the micro issues on a very in-depth or insightful manner. For that, to the captain, compliments to the captain, vice captain, and the whole team. Thank you so much. And again, coming to today's sessions, when Nilesh is there, I feel he's always been a person who always inspires us to aspire. So we are the few kind of young generation which get hooked to the philosophy he has always demonstrated, and that's how I feel the brighter days of assurance and advisory is good for mid and big size firms. Now, coming to the topic, and especially my respect of contemplation to considering putting the bucket of 3 standards, and what the practitioners from smaller cities respond to this. I think there is a lack of awareness in terms of bindability. When we talk SS600, when we talk about principal auditor and the component auditor, they feel in laxity in responding because they don't appreciate these standards. And coming to the rest 610 or 620, it happens so. Because ultimately, if you see clearly the requirement, the primary responsibility is of the auditor. But of late, I'll say, be it of ignorance, if I allowed to put this word, we feel that when we receive a deliverable from an expert or the other auditor or be it the internal auditor, we feel our responsibility is discharged to that extent, which is not. So it becomes very critical how we evaluate the risks part of it when we put in the other auditors, be it internal or experts work into our domain when we form our opinion on a particular engagement. So couple of things in not in a particular order. First, we should be very keen on due diligence and checking the backgrounds of the person whose work we are going to evaluate and incorporate in our delivery. It is very critical to understand the methodology, what the other auditor has used in getting those deliverables to us. Because unless we understand their methodology, what they have used in their engagement process, it is very difficult to align our objective of getting the deliverables done. And staying in that aspect, I think the communication collaboration becomes more critical. Because, for example, if the other auditors I'm engaging with, so initial days of communication in terms of what objectivity I want, what kind of deliverables I am expecting from the other person becomes critical. So communication on a very constant way becomes very important in terms of understanding, appreciating, and making part of the other auditor's work as part of my engagement process. Then legal and ethical considerations, of course, yes. Sometimes I have seen a few areas wherein people have just referred to the other auditor's work or the other experts' work so straight that they have deviated from the data privacy part or confidentiality part. So that understanding is also required when we draw reference to these things. So more or less, as the ecosystem grows, and I feel the auditing ecosystem both is going to expand vertically and horizontally. And usage of other works, be it internal auditor or expert, is going to be more and more. So it's staying so. The usage and technically being right and using those aspects will be going to be very critical. So that's, I think, will suffice in terms of understanding this aspect of this result.
Yeah, thank you, Sanjanji. So you touched upon some of the important aspects about the ability of the others, I would say, as this topic is today, to deliver, and also with respect to the integrity, the technical skill sets and all that should be considered. Yes. Moving to Shwetaji, can you just share about, with respect to enhancing the group audit reporting, what can be the strategies for using the work of other auditors as your opening remarks?
Thank you, Vishalji, and thank you for allowing me to share my views with two senior colleagues of mine in the fraternity. So, as you had asked me to, share my views that what could be the strategies for using the work of other auditors. We all know that in today's globalized business environment, many companies operate under subsidiaries and associates and JVs and affiliates methodology. And the sole responsibility of issuing the standalone or the consolidated becomes the prime responsibility of the principal auditor. So while I agree with Sutharji and Nilesh sir, that how we should evaluate the other auditors. To my view, the first step should be a self-homework, which is the self-assessment, what we should do, which we also call the planning. When the assessment of the materiality of the portion of the financial statements, which the principal auditor itself is auditing, should always be done. We should always be aware that on the CFS point of view, what is going under my pen and what is I am relying on the other auditors. Then the second crucial thing should be is always like understanding the business of the components. We should always have a detailed understanding of the business of components and what is the risk of the material misstatement which can flow to the main holding company if at all it flows from the subsidiary. And of course, performance of the additional procedures, which can be, of course, maintaining, the communication protocols with the audit team of the component, understanding component auditors, specifically in cases where foreign subsidiaries are involved, where audit firms are not the members of institute, and even in certain circumstances, it may so happen that the audits are not done by the professionally qualified auditors. So in that scenario, SA also stresses the importance of understanding the competence and capabilities of the component auditors. Then if the components are very material, then of course visiting and conducting the independent examination to get a comfort, wherein if it is required as per law as well, is also one of the key highlight and the key essence of the entire procedure. We keep on, as Satharji has also said, that the key essence of any engagement is to maintain the communication. So of course, with this communication, we can ensure the quality controls, we can ensure what all significant findings are of the component auditors and discuss with the holdco companies, and attempt to have certain supplement tests around that. And of course, besides communication, thorough documentation of the work performed by our team as an assessment, and of course by the component auditor, is very crucial. Even as a 600 dwells that need for the that it's a crucial need for the engagement team to evaluate the nature, timing, and extent of the work which is being performed. And of course, all these strategies do align with SA 600 and the regulatory framework, which is the SEBI LODR also asks us to do this and all. And yes, and just to conclude the thing what I have been asked to report on, that enhancing group audit reporting through effective use of work of other auditors with due consideration to the principles of SA 600 requires a combination of clear communication, understanding of component auditors, rigorous quality control, and the compliance with standards.
Yeah, thank you, Shwetaji. I think you touched upon some important aspects. One, again, very important is understanding and knowing the business of the components. And especially when we talk of a line-by-line consolidation, when there are some differences in the components or accounting policies and practices, definitely that needs an adjustment, and line-by-line is not so easy in such situations. And also about the risk of material misstatement and independent examination of the component financials. So I think that was an excellent opening batting by all our three experts. And now moving to some nitty-gritties and some more pointed questions. Again, starting definitely with Nilesh Bhai. Sir, can you elaborate on the practical challenges that the auditors might face in applying the standards on auditing while using the work of others, and how they can be mitigated?
Yep. Thank you, Vishal, for the question. And before that, just one thought came to my mind, an experience. When you mentioned different businesses, different thing. We were auditors of a conglomerate where, apart from manufacturing, they had a financial services, set up, and there was an insurance subsidiary below. And insurance subsidiary was on the old GAAP. There, the IFRS 17 has still not been, sort of appointed, and the holdco was on Ind AS, and this one, so forth. So very peculiar. Even on the NBFC front, they till 2017-18 they were in the old GAAP. So changes, insurance again translating the statement for that line-by-line consolidation. So very interesting. So you're right that what Shweta mentioned, different business. Coming to the question, what are the practical challenges one faces, during the application of SA 600? I think the most foremost is, if it is a sort of again a conglomerate where holdco, subsidiaries, associate, JVs, etc., and there are different set of auditors. So first and foremost is the timely response to the group, instruction. The challenge of getting the feedback from, because we work in a timeline, the time-specific thing. The holdco board meeting decided, the subsidiary may be 1 or 2 days earlier, and right from the time of planning stage, the work doesn't only start at the end, but it starts right, throughout the year. So timely response to group instruction is one of the practices which could come up. Let me again be very be very happy in informing that as a firm, we are doing number of these, I would say, audits where SA 600 is applicable. And till date, we have not found this challenge. But technically, this challenge could be, if the alignment is not there, of the auditors. But I think most of the auditors, audit firms in India are aligned to it with this SA600. They know the responsibilities of the timelines, so they do that. Second is the independence requirement, as we discussed earlier, of the component auditors, and taking the response of the independence from this. So that could be another check if the component auditors are not sort of independent. That is another, I would say, could be an area of focus from a practical challenges. I mentioned that earlier. The lack of communication from the component, I think Shweta and both Mr. Sutar mentioned about it. Communication is key. It has to be an ongoing communication. I think NFRA also in one of the recent orders had mentioned that, whether it is communication with the TCWG or even communication with the component, their expectation is much higher than what is presently prevalent. So that is, we need to communicate more with the component if you are a principal auditor or vice versa. And again, as Shweta very subtly pointed out, in case of foreign component auditors, there are different set of challenges come up. One of course, whether they are competent, whether they're members of that particular institute. Sometimes language issues come up. So we have got some experiences, but we have got positive experiences of even they understand the fact that in India we are different, and if we engage in even larger firms abroad, they do interact with the principal auditors, assuming they are not from a equivalent size firm. But we have seen that openness if the client inspect. I think one other way of sort of sorting out what are the expectations out of SA600 is, what we are doing is we are giving a detailed checklist, annexures, what we want the component auditors to respond. So whether it, confirmations regarding number whether they received this instruction and they understood them, then the early warning memorandum in case any, some major queries are there and exist early, so that it can be resolved, discussed and resolved in time. So that communication and early discussions is very important on major matters. So typically, we have seen in the BFS sector, whenever a new circular comes up, again, we have got the positive, component, but I'm just saying it could be a challenge, and where, say, different set of the same matter, different set of auditors may have different views. It's always better to engage, have a discussion, come to a common set of a consensus for a new thing which is emerging, a new instruction of RBI or whatever. And we have found that very positive. People express their views very openly. There's brainstorming which happens, and people come to a consensus and having satisfactorily come to a conclusion. Not that they are being forced to, come to a consensus. So that is, one practical challenge covered. We have got a positive, feedback on that. Component materiality is again an issue which we sort of escalate. The completion memo, what are the final conclusions which are arrived at by the auditor? The summary of unadjusted, audit differences. The what do you call it? The component level, they may think it is immaterial, but maybe at a collective level. So that has to be reviewed. The tax summary, the subsequent events, if there are anything, so memo around that. Then whether all the group accounting policies have been followed. And as I mentioned, there could be different policies. Suppose, the principal is either on India's IFRS or not on India's IFRS, and vice versa, the subsidiary. So those alignment of the policies is very important. It's the different gaps based on the regulatory, requirement. Insurances there, banks are still on the old gap, and assuming there's a holding and subsidiary. So that alignment of significant accounting policies. So assuming the different policies followed, then even for consolidation, fit for consolidation accounts will have to be done. Those will have to be translated to that extent. Another area, I think, which is a very critical area, Vishal, is the related party transactions. Now, thanks to the SEBI LODR, that rigor has gone up substantially. Even, the transaction of subsidiaries with related parties, transaction of subsidiaries, which, parties which may benefit some of the related, which may not, will be out third parties. So the checklist around that and the questioning around that has increased, that is there. And then finally, the component audit reports and other deliverables like financials, etc., the timelines around that. And if there are any adverse remarks on Caro, some details. So these are the checklists which are sent, they're received, they're reviewed, they're debated, and then finally taken on board as far as the final, the consolidated numbers are there. So these are there could be private, but again, I'm reiterating, we have got excellent experience. We have not faced any of those challenges. Everybody is aligned when it is made clarity, there's communication. We have not forced this time, but this could arise practically sometimes. Thank you.
Right. Yeah. Thank you, Nilesh bhai. I think you mentioned about timelines, and yes, definitely that does pose a challenge. Though, like you said, that in India, everybody is aware, but still the gap between the two meetings of the, I would say, component vis-a-vis the holdco, that at times does pose challenges, especially at the last minute with so many things to handle as the auditee, both sides, I would say. And also on the independence, the different views that the different auditors would have, and how to sort that out. And so you also stressed upon the related party transactions, which is now, I would say, under the binoculars by every regulator and every person, I would say all stakeholders for that matter, the related party transactions. And so you also touched upon communication. So just taking this communication point forward, I would like to ask Biswaranjan ji, that how do you ensure effective communication and collaboration when utilizing the work of others in an audit? You'll have to unmute, Sudharji.
Vishal bhai, what you said about the timelines, as we see tomorrow, the timelines are going to get stiffer and stiffer. There is no second thought on this. And when coming to this set of series, 600 series, it actually works against that timeline. And here it brings that the communication has to be proper, and the state bat should be define the roles and responsibilities with the regular communication as early as possible with your team. Documenting, again, communication without reflection of that communication through a documentation, again, a bigger blunder normally people do. So document what you are communicating with your team. And in general, what we use the work, when we use the work of others, we tend to assume that the delivery is to the requirement and rely upon that at face value. Normally, it happens when you use the work of expert on a very minuscule or smaller city farms. That's what I have seen through. So that is the bigger mistake what an engagement tool can do at any time. So regular training to your staff members becomes important and critical to evaluate. At least you should draw the reference points, because when you use the work of an expert, obviously you are not capable of doing that engagement, or for some other reason we are referring to the expert's work. So the person who is going to evaluate and risk assess that delivery has to be properly trained, properly communicated. So I believe in either of the ways, be it you are using SS 600, 610 or 620, communication becomes the base of this engagement evaluation process. And more you communicate and collaborate, your risk assessment going to be get finer. And it gives you the scope to relook into your work and go back to the drawing board in case you feel that it is not realigned with your objectivity, and so that you can increase or decrease your sample size, and it will make your assurance more qualitative.
Yeah, I think again some important points made, and the last one was the I would say the most important, or categorically said, that to realign with respect to the scope, with respect to the objective, yes, if required, the activities. So, Shweta ji, coming to or continuing with what Biswaranjan ji said, and on a very specific point with respect to IFC, the internal financial control, because that is ever so important for a statutory auditor. Now, whether existence of a clean IFC study report by an external agency is sufficient for a stat auditor to issue a clean report under the Companies Act? And otherwise, what if the stat auditor is not convinced of the contents of the independent IFC report?
So definitely existence of an IFC report is a significant factor that can influence the work, but it does not automatically guarantee the issuance of a clean report. So it of course supports the views, but it does not mean that if a clean IFC report is available, then statutory auditor is also going to issue a clean IFC report under the Companies Act, because Companies Act and the even guidance note issued by Institute warrants a statutory auditor to conduct the self-testing. So, of course, statutory auditors are required to maintain the independence and objectivity in their assessments, and hence the clean IFC report issued by an external agency cannot be just taken on records just as a backup and no work to be performed. Secondly, beyond the financial controls on the overall, statutory auditor is also required to report on the financial controls on the overall financial statements. While even a clean IFC report just indicate, effective internal controls. So the responsibility on statutory auditor is broader, I would say, and it includes existence, completeness, valuation, presentation on all the financial statement assertions, I would say. And also, it is essential for the statutory auditor to communicate with an external agency who had conducted IFC study, if at all what are the procedures followed, if any concerns or discrepancies or deficiencies have been, reported, then it should be discussed and resolved. So that it should not happen that they are reporting something and a statutory auditor is reporting something in contra to it. And to report, if at all IFC report is not a clean report by an external agency. So what should be the processes which we usually do? In the second scenario, we document the reasons for such reservations. We discuss with the external agencies that what was the process, what was the thought process, while evaluating that specific area. And such kind of documentation becomes even crucial when the regulatory inquiries or future audits are being done by QRB or peer reviewer or someone else. So additional audit procedures are required to be conducted to address any doubts or the concerns regarding the IFC report, which includes testing specific control or reassessing the risk or seeking additional advices. In this kind of circumstances, we do adhere to the relevant regulatory requirement and auditing standards as well. In many jurisdictions, standards require the auditor, to exercise professional skepticism and judgment in forming their opinion. So that's the need of the essay, what we are into, in the environment we are into. And of course, at the end, we may always seek representations from the management towards the effective internal controls. So just to summarize, existence of a clean report does not replaces the statutory auditor's obligation to independently assess the internal controls and issue the opinion.
Yeah, thank you, Shwetaji. I think so. You hit the nail on the head that just having a clean report does not absolve the statutory auditor's responsibility from their responsibility. They have a much broader scope, and especially with respect to the financial statements assertions that the statutory auditor, or I would say the principal auditor, is responsible for. Nilesh bhai, I would ask you a question again and a couple of questions of the audience that we have received so that you can respond to them. So the question from our side is that so can you elaborate on the specific methodologies or the key measures that auditors should apply while assessing the quality and reliability of work completed by others prior to incorporating the same into the audit process? And a couple of questions that have come from the audience is one, how to factor in the risks that are faced by the auditor while using the work of experts belonging to other domain, like communication with them were not consistently made owing to various geographical locations or different time zones or any such thing. And also, whether we need to share with the expert or the component auditor, external expert, feel that they are helping the statutory auditor as value addition.
Thanks, Vishal. I'll take the audience question first. how to factor the risk of use of experts, especially if they're in other domain or geographies and all. I think a couple of things. First, let's talk of the other domain. The geographical will come to later. So I think one thing which comes to mind is the actuarial, sort of thing. And I'll just see how it has evolved. Earlier, what used to happen is we as auditors used to blindly sort of accept the actuarial, valuation of certificates as gratuity or this, that, or whatever they were doing. Or in case of insurance, the insurance, the liabilities, the provisions which was made. But that is not enough that you accept it as is, where is, what. So number one, I think there are a couple of things that we need to see. First is what information has been given to the actuary, whether it is assuming it's gratuity, whether the employee cost, the number of employees have been, whether the full information has been given to the actuary. That's the job of the auditor, because the result will be as good as the input. The output will be as good as the input. So input has to be verified. What input has gone to the domain expert by way of information, the number of employees, the package, the salaries, this, that, etc. That is one. Second, I think the auditor's responsibility is to test the assumptions used. And I'll just give an example. Some years back, I was evaluating some of the public sector banks' notes on this gratuity. And I saw, at that point of time, most of the public sector banks, even now, by and large, they're similar, age profile, this, that, etc. But the assumptions used were quite different by the different actuaries of the different banks. It has an impact on the liability. So I think, so whether the assumption used, balance number of years left, the interest or the discounting factor used, so on and so forth. I'm taking one example just to clarify what is the duty of the auditor. So please, there could be other areas where we use experts. Maybe there could be, again, there could be in valuations we use other experts on, for impairment testing or for the investments made, etc., or for the fixed assets. So there again, the same thing, the projections which have been given to the valuers. So on what basis, and assuming 1 year of the project next year, assuming you're the continuing auditor, whether those projections have been met to arrive at a value. So it is not a garbage in, garbage out that whatever has been given, you have to just accept whatever has been given by the expert. You have to do a diligence on the information given and even the output. That is the basic minimum which the auditor has to, sort of see. Coming to the next, I think there was derivation, geographical distance and all. I think that all is, in today's world, I don't think those geographical distance is a challenge in communication. There's emails available, there's Zoom, there's Teams, there's, So I don't think that, in my view, that's an excuse. If somebody says somebody's in US and I can't do that, and today we do, meetings in US also, maybe 7 o'clock in the night, 8 o'clock in the night. Some people do much later also. So that if the intent is there, solution can be found. So one is what to see, how to factor risk. So this is what I'm saying. The factoring risk is you see the input as well as the output. Don't accept it as is. Your criticality of review has to be there. It cannot be just accepted as it is. But I believe that was as far as the audience question is concerned. As far as the question which you raised, Vishal, could you elaborate on the methodologies which should apply by assessing the quality of the work completed by others? I would say first and foremost is to verify the team which is involved in the component auditor. Maybe just see what their experience has been, what their qualifications are, what is the training, etc. If you can just ask those relevant questions. See, one is by and large, you may say, assuming you're a principal auditor and the other auditor is a larger firm. So as a firm, you may know, okay, by and large from the market share, this firm is good. Large, mid-size, small, whatever. I'm not talking of that. But which is the team involved in that specific assignment? Maybe one may like to have a flavor thereof of the experience, training, as well as qualifications and any of the certificate they have. And then maybe add that in your group questionnaire also, what is the, this on the same matters. And based on that, how much reliance you can keep on the numbers, I think can be decided. After that, I think what we need to see is, what are the procedures which the component has performed and are they adequately documented? We are not doing an audit thereof, but what is the process they've done for the audit? So review that, whether that process is adequate or not, which include the methodology used, the sources of the information and the steps taken to arrive at the conclusions, finally. And another thing is, again, the teams which are there in the assignment, are they independent, objective in their, within the organizational structure, reporting lines, and any indications of any undue influence? This is just a smell test. I don't think some of them has to be a smell test which comes across to you. May not be so much in writing. So I think that is another, thing which we need to be careful of. And then some follow-up, questions, procedures arising. You find something in the reporting which comes up. So maybe just if you are alert as this thing, and then maybe ask some pointed questions in the communication which you have, in your meetings which you have with the component auditors, I think things will pan out. In my view, this is what we need to do.
Yeah. Thank you, Nilesh bhai. So you highlighted the importance with respect to the training and certifications that are there with the component auditors or others, means if there are other professionals in that case also. The procedures and the documentation that they follow and the responses to questionnaires before their certification, during their certification, and also afterwards at the time of using their work, and how they are able to respond that. I think so that becomes a very important, I would say, benchmark with respect to the comfort that we would be having on using the work of others. I would now request Shweta ji to, if you provide some examples of situations where the work of internal auditors, specifically now, not component auditors, but internal auditors significantly contributes to the efficiency and diligence of the external auditor.
Certainly. So to my mind, work of internal auditors do significantly contribute to the efficiency and diligence of the external auditors in various ways. For example, they continuously monitor the effectiveness of the controls in the various procedures in the areas of the organization, which of course reduces the need for extensive testing due to the external audit. And of course, it enhances the efficiency. It allows external auditors to focus on the more gray areas which are there instead of the lenient or the usual areas which are there. Then the substantive procedures involving limited judgments, wherein the use of data analytics and technology is done by the internal auditors. This provides a deeper understanding of the data and the potential areas of the risk, or facilitating more targeted audit procedures. For example, if you may say, testing of the invoices or agreements, wherein the mammoth time is included in, reviewing a similar kind of same kind of data. So that time saving happens for the statutory auditors team. When the physical verification, if they are involved in the activity or they themselves conduct it, it provides a kind of a comfort to statutory auditors, and of course reduces the time which a statutory auditor has to ultimately devote on this. Maybe tracing transactions to the information system which are relevant to the financial reporting. So external auditors can leverage the insights provided by internal auditors in understanding the entire organization's anti-fraud programs or the controls which are inbuilt by them. Testing of regular regulatory requirements is also one of the area which internal auditors, do keep into their pan, and of course provides an comfort to the external auditors, and this reduces again the time involvement of the statutory auditors. And internal auditors, being the one who are more focused on the processes instead of transactions, they do conduct regular risk assessments and evaluate the effectiveness of the internal controls. So this again gives an insight to the external auditors, the statutory auditors, about the organization's risk landscape or the robustness. So to summarize, there are many such other examples. To summarize, the collaboration between both the auditors can always lead to more efficient and diligent external audit process.
Yeah. So, Sweta ji, you touched upon control testing, the substantive procedures, the tracing transactions to the systems, and the regulatory requirements, and various aspects of the internal audit scope or process, which would help the external auditor. And here I would further like to add, based on my experience, that it is very important that the external auditors reviews and goes through the scope of the internal auditors at the beginning of the audit, the stat audit or the external audit itself. That would just, I would say, give a lot of insight into one, I would say, to avoid duplication of efforts, because like Nilesh bhai mentioned that, if you have the comfort the trust on the internal auditors with respect to their procedures, documentations, and everything, then some of the areas which they are doing as part of their scope, which typically an internal auditor does in a lot of detail, maybe that can definitely impact the sampling and the efficiency of the external auditors, and also at the same time look into areas which are not covered by the internal auditors, which can be requested through the management to either get them incorporated, or maybe then the external auditor can increase their scope or verification with respect to such verification. So with this, continuing with Viswaranjanji, that how do you follow up on any discrepancies or differences that are in the findings between the external audit and the internal audit?
Vishal bhai, being an ongoing process, it is natural to have a difference in findings, because when two set of professionals doing the same work, even though doing the same work, the perspective through which or the objective they will be having, it will be different. So it is always critical to communicate and collaborate with the internal auditor and have a healthy discussion in understanding the insights and especially their perspective. So it is not necessary that there will be a difference of opinion, but there could be a difference of situation, nature, time, extent. So because of that, there could be a situation when there will be a difference of finding between the internal audit and external audit. So the best way of dealing with it is that have the regular communication going both ways, and have the prospective understanding of the internal auditor, and have an insight and reason out why these differences are. So at a point, if you feel that post reasoning out that these differences are genuine and there are material to your assessment of risk, then you always need to realign your risk assessment to your objective. Because at the end of the day, it is you to external auditor to form the opinion. So in that case scenario, if you post reasoning out, if you feel still the risk has to be reassessed and there is an enhancement of scope, how you have already approached, and this situation requires a modification to the approach, you should be doing it. And based on that process, you need to conclude it. So, but having said that, having a difference of findings between the external auditors and the internal auditors is, of course, obvious. But the key element is to that please have the understanding of that perspectives of different set of people and have insightful reasoning out of that situation before you go ahead in aligning or realigning your objective.
Yeah, thank you, Viswaranjanji. I think so. That was a very nice point you made, that with respect to the regular interaction and communication with the internal auditors. Nilesh bhai, I would say that we have a very active and participating audience today. And based on your last response, immediately we have got a counter question, and which I will put before you. And there is always this scheme, ek par ek free. So I'll ask my question and also the audience question to you. So first, the audience question, because it was in continuation to your earlier response, that in case of insurance company audit, so the auditors, they rely on the work of the appointed actuary who certifies for the valuation of the policy liabilities. And this is also brought out in the other matters that reliance has been placed on these exports. So the question is, does the auditor need to perform test of data accuracy or assumptions similar to what you mentioned with respect to the gratuity and leave valuation? And also whether such assessment may be difficult because the specific skill set required and voluminous data, and thus putting such other matter para absolves the auditor. So first, because the question is large, I would not trouble you more. Maybe you can first reply to this audience question, and then I'll again pose the next question to you, sir.
I think the way my limit, not I would say limited, but the knowledge on the insurance side is, what I've observed is most of the auditors, if not all, if not 100%, we qualify the fact that this the actuarial liability calculation is done by the actuary, the liability calculation, and I think possibly the accounts are subject to that or something of that sort, because generally I believe we are raising the hands of as far as the qualifications, not just a reference in other matters. If my memory serves me right, I may be wrong. if we are not qualifying it, then of course we need to see the data accuracy itself. There has been, of course, there could be a lot of this thing, handicap in the management wanting to provide information, this, that, etc. But I think in case we are not qualifying, we'll need to see the data, given. We need to see the assumption, whatever I mentioned, I think for gratuity and all, same thing we need to do for insurance if you're not qualifying. But if you're qualifying, saying that this has not been, it has been done by the action, we are not, subject to this is true and fair, then I would say then at least there could be some leeway. But otherwise, I think we need to look at the data given as far as the even the insurance company liability provisioning is concerned, and also the assumptions, etc., which have been used. In fact, again, from my recollection, I can believe there are independent actuaries also which are looking at the company employees who are actuaries who are giving those reports. I think there is an independent assessment also done by the companies whether the actual provisions are in order or not.
Yeah. Again, a follow-up question from my side. That was with respect to actuarial valuation and all, where we talk about financial liabilities and the valuation. So we have seen many such industries, especially the oil and gas, where the quantification of reserves and all being such a highly technical matter. And when we look at some of the numbers with respect to the decommissioning liability, or with respect to, I would say, impairment testing also, with respect to the oil and gas, the wells and all, because that is a purely technical subject. In that case, sir, because there also the auditors in the other matters para say that they have relied on the that committee recommendation what they have in such huge companies. So how would that be different or similar to such actual valuation in case of an insurance company? Or from the
Vishal,
stat audit procedure side, sir.
Yeah, Vishal, I personally don't have exposure to this area, but let me again share with you. I agree, it's very the quantification reserves. You said this oil field got so much oil barrels or whatever. So I think a continuous assessment is important. I don't know what is the periodicity is 1 year, because what my understanding is there's a what do you call that geo shift also, which keeps on happening. So what has been estimated at a certain point of time may vary over a period of time. The oil fields are long drawn. I think we have seen Bombay High for 30, 40, 50 years, continuous oil is producing. But what was estimated earlier may change depending on things go. And for me, the biggest, I would say, just from an experience, I would say the media reports what I've seen is the KG3 gas reserves. I think when initially it came, it was said the whole India will flood on gas from KG3. But somehow after some years, that those estimates went in the air. I don't know what happened. Again, I'm saying, I'm just giving a very helicopter. I'm saying I may be completely wrong and off the cuff. So that again establishes that it has to be estimated periodically. Maybe I'm not sure again from an industry whether it can be done every year, once in 2 years, 3 years. That I'm not an industry expert, so I can't comment. But that reassessment has to be done periodically is a given, because it may not be static. The results may not be static. There could be changes, the estimation. So that has to be reviewed is my view. And similar thing on decommissioning and the impairment testing, all that will be correlated to the reserves and all this. And something similar could be in the coal industry. You've got that overburden removal, mines get over, how do you... So there are different nuances across specific industries. Again, I have done a coal industry 30, 40, 50 years. I remember the word overburden removal. I don't know what else is. So, but we... just suffice to say, whichever industry, maybe a little bit go more to detail, and whatever estimations you are using it, whether it is quantification of reserves or quantification of the ores or the coal in the mines or whatever, I think let it be assessed periodically. Periodicity, I can't suggest right now, but I think that has to be done. From a common sense perspective, I'm talking common sense here. I'm not talking, I would say. Yeah. Otherwise, the results could be, at some time could be completely, and KG3 is one big example, I think, of the gas what we saw.
Yeah. Right. Yeah. So, Nilaj, I'll give you some rest now because you have responded to.
Thank you.
So I'll come to Shwetaji. That coming to SS610. So how does the standard address situations where the work of others it might not meet the required standards or lacks adequacy, then what are the appropriate actions that auditors should take in such situations?
Vishalji, before I take up this, I'll just like to add 1 minute on that insurance thing. So while Nilesh sir has mentioned that what happens in case of the actual report, what we get for gratuity or the leave encashment, that we check the base data and everything. Over here also, certainly the procedures are a kind of similar thing. Of course, many technicalities are involved, and that's why we brush it off our hands that, okay, we have relied, on the calculations done by the appointed actuary, and of course they are peer reviewed by the actuary institute as well. So we do review the base data, what is being shared with the actuary, which coincides with the financial statement. It can be the claims data, or it can be the how many claims have been handled during the year, and what's the status as on date, what kind of catastrophic events have happened during the year. So these kinds of communication and testing of the data is actually a kind of audit process which should be implemented. So now
Thank
to
you.
answer. So now to answer your question that how SA 610 addresses the situation where the work of others might not meet the required standards or lacks the adequacy. So as we have been speaking since inception of this session, the external auditor is the sole responsible party for any kind of reporting or opinion issued under his hand. So usually just to first we need to figure out that how these gaps are usually identified. So of course, while assessing the competence of the other party who is doing the work, whether the required knowledge or the skill set of the respective industry in which we are in as an external auditor, whether that other party has that competence or not, or maybe while assessing the ability to perform work without any kind of conflict, what we called the assessing the objectivity is another assessment wherein such kind of gaps can be identified. And of course, maintaining the real time or maybe maintaining the periodic communication, which will give an kind of an idea or a sense whether a systematic or the disciplined approach is being followed by not, whether the proper procedures of planning, performing, supervising, reviewing, and adequately documentation is being done or not. Now, in this scenario, if the external auditor, gets to know that there are lacks of the adequacies, then what procedures should we as an external auditor should do? So we should reassess the extent to which we can rely on the work performed by other auditors, and then we should perform additional substantive procedures. We should increase on the sampling, we do the risk assessments, and we need to consider the potential threat or potential impact on the reliability of the work which has already been performed by some external party. As I said, that additional, with that we need to perform the additional procedures to get the necessary assurance and issue the report. We can seek the consultations within the firm if the experts are available, or with the experts to determine the appropriate course of action and the potential alternatives, what can be there. We do communicate with such kind of significant deficiencies or limitations with TCWG as well. They need to know that they have appointed someone as an expert, but yes, there were lack of adequacies and something like that. And of course, at last, we need to even assess the potential impact of such kind of reports in our audit opinion as well. Maybe if you'll see that there is a report reporting in the CARO which says that if the internal audit function is commensurate to the size and nature of the entity or not. So such kind of reporting should also be assessed, because it not only increases our additional procedure, but it gives a kind of a risk to the entity as well if such kind of lacks are being addressed or found in the organization. So to quickly summarize, that external auditor should maintain the ultimate responsibility and should take appropriate actions, including expanded audit procedures, consultation, and communication with TCWG.
Right. So you touched upon important aspects again on increasing the sampling where there is an inadequacy. of the standardization or the comfort that we have on the work of others, and also regular monitoring, communicating with those charged with governance, the TCWG, and finally, the most important aspect, the potential impact that it would have on the report. So, Viswaranjan, is there any communication that is required for using the work of internal audit function?
Bisalbhai, before answering this, when we talk about usage of internal audit function while discharging our attestation function, it's a very interesting scenario and situation. We are expecting the internal auditor to be independent, wherein internal audit per se is not independent, and we are going to use the work of internal auditor for forming an independent opinion. So that's a very interesting situation. And to navigate that situation, I feel 610 comes into play and becomes a bridge. And that requires a communication on dotted lines. And this goes in a three-way communication, if I put it in straight. First, that you should communicate with the internal auditor in the form of agreement, because unless there is not on dotted lines, it becomes non-binding. So a binding communication with the internal auditors becomes critical. And we should explain specifically that what I'm expecting from the internal auditor, specifically setting on the scope, timing, nature, or any specific area I want the internal auditors to deliver me on this aspects. Then coming to the second aspect of making a three-way communication is communicating with the TCWGs or the management itself. Because unless management acknowledges this communication between the external auditor and internal auditor, it serves no purpose. So management should allow and agree to allow the internal auditor for getting used for external audit, and that has to be on an independent basis, staying though the internal audit primarily getting appointed by the management itself. So I think this three-way communication has to be there on clearly dotted lines. Otherwise, the purpose of using the work of internal auditors deviates from the independence proposition. So to make this interesting situation independent and to safeguard our interest and taking care of 610 as a bridge, I think this three-way communication has to be critical, and this three-way communication on dotted line has to be very specific with a lot of clarity.
Yes, a very important point that you made, that there has communication, and I would just like to further add that as far as the management allowing the statutory auditor to use the work of internal auditor, that should also be incorporated as part of the management responsibility in the engagement letter, so that that clarity is there. Nilesh bhai, whether external auditor needs to pay or can pay any remuneration to internal auditors for providing any direct assistance?
Vishal bhai, let me again first candidly admit I have not seen many, not forget many, where see, by and large, the internal audit is reviewed by the statutory auditor for designing his own, how much he's going to do testing, controls, etc., what are substantive procedures. I have not seen a situation practically where a certain depends on the auditor to do some part of his responsibility. So, having said that, this situation is new to me, but assuming it is there, in my view, statutory auditor pay could have a challenge on the, and I would want comments of Mr. Sutar and Singhal, because for me it's a new situation I have not come across. That could be a challenge of the independence, of the internal, because he is paid by the management for the other internal functions. So statutory audit paying, rather the way Viswaranjan and Shweta mentioned, it's better to have a three-way communication. So this is what we expected with the management. These are the activities the statutory wants the internal auditor to do, and which is going to sort of rely on for his scope and coverage of the work is concerned, responsibility, and let the management continue to pay him rather than the statutory pay him. So this is up to, I'm saying, out of lack of any practical experience, I'm saying from a theory perspective, is my impression, I may be wrong. And but I would again want some expert comments from Shweta, or so if they have come across some situations like this, Viswaranjan.
So I certainly agree with Nilesh that we may appoint a direct internal auditors for direct assistance, but it is more from the point of view to maintain the control on the processes and the work which is being followed, and ideally to maintain the independence, there should not be any kind of a direct pay of remuneration. And of course, again, the theoretical aspect, I have never seen in my 12, 13 years of career a situation like this wherein the statutory auditors are making.
True. Let's say what you said is actually right. It is a very sticky situation. And maintaining the sanctity of independence is very difficult and troublesome in some situations. But what you said is very right. And
Vishal,
Yeah,
what
and
are you?
I-
You have to give the final vice chairman of
No,
WFS.
there's nothing final, but I think, just looking at the language of reporting also under CARO, where we as statutory auditors also mentioned that whether the company has an internal audit, which is commensurate with the size. Now, if the stat auditor is going to make payment for any such direct assistance, then whether, I was just thinking loud based on Nilesh bhai, yours and Shwetaji's and Biswaranjan's response. That, then as an auditor, how would we report for that under that particular clause of CARO also with respect to the internal audit system that is to be maintained by the company? I was just thinking loud, reflecting upon our reporting responsibilities also in that.
So that's the reason, Vishal, basically internal audit, is a management function. So management may do it, the employees outsource this and whatever. And the statutor can design his scope and coverage based on whatever the internal audit is happening and how much he sort of got the confidence on the competence, on the people or the team size, etc., or the amount covered, what are the areas covered. And so, directly paying the employer by the statutor is something which is sort of not envisaged, if I can say so. Yeah.
Agreed. Biswaranjan, can you just share what are the documentations that should be maintained by the external auditor for using internal audit to provide direct assistance?
Broadly, if I divide it in three aspects to this, first goes with the evaluation of the process itself. And in evaluation in terms of whether the functions, organizational status, and relevant policies, procedures are adequately in line with the objectivity of the internal auditor, the level of competency of the function, or in evaluation whether the function applies to a systematic discipline approach, including quality control. Because these three-aspect evaluation becomes critical on the first stage itself. Second is having a documentation of the nature, extent of the work and basis of that decision. That becomes critical. And third, coming to that, the audit procedures performed by the external auditor to evaluate the adequacy of the work used. So that, because at the end of the day, we need to conclude what we take the reference points from the internal audit. So that conclusion has to be demonstrated how we have concluded on a particular issue. So I think on these three aspects, broadly, we can conclude the communication and documentation part.
Right. So I think Biswaranjanji is very attached with 3 pointers. So in the earlier question also, he responded by 3 points. This also he has responded by 3. Shwetaji, moving on to
Vishal bhai.
Yeah. So moving on to SA 620 now, we had a lot of discussions on the internal audit now. Can you give some practical examples with respect to situations or circumstances that might have resulted in a modified auditor's opinion as per for under SA 620?
Sure. So, just to give you a brief background for the audience, because everyone knows that SA 620 provides guidance on how an external auditor should use the work of the auditor's expert and what are the implications of the auditor's report. So there can be certain situations wherein auditors need to issue the modified report, maybe in case of material inconsistencies or scope limitations or other circumstances as well. So practical examples, what I could quickly remember about is that there could be material disagreements between the experts' findings vis-a-vis what management has or what understanding we have It can be maybe the fair valuation of the significant financial instruments which are recorded in the financial statements. There could be certain limitation of the scope in the expert's scope while conducting any activity, and this gives a gray area to the result which is being presented by them. Maybe the expert is unable to provide the required information or complete the necessary procedures with what external auditor is required to do. If we do any certain inquiries, that what were the procedures followed and what is the documentation available. In that scenario, he is unable to provide certain kind of information. And if we are not able, if we are not able to obtain any kind of convincing evidences, whether the work which demonstrate that the work being delivered by the expert is incomplete or it's inconclusive. Maybe there can be differences in the methods or the strategies which are being used by the expert vis-a-vis what are being asked by the applicable financial framework. It can be the valuation methodologies, or maybe a certain procedure which needs to be followed to deliver a thing. Or maybe external auditor becomes aware of the fact that expert is providing services that has some financial interest in the company. It impacts on the independence of the expert. In that scenario also, there can be if the result or if the work of the expert is very much material to the financial statement, then that can also be captured in the audit reports. Maybe if we get, while we were evaluating the competence of the expert, if we get to hear about the negative feedback about the competencies, which of course again results into an incomplete or inconclusive work, then again, if it's a material item, it can impact the audit reports. So it's very important to, as Nilesh sir has also said, that it's very important to start communicating on stage 1 instead of coming at the end and then getting to know that what are the results, whether the independence was not there in XYZ, if the material financial transactions are being involved. And that's how, I quoted a few illustrative situations wherein a modified audit report can be issued.
Right. So thanks for giving those examples, or I would say circumstances that would result in a modified auditor's report. Nilesh bhai, we talk about the actuaries and all. Coming to another aspect of an expert is the valuation, and especially when we talk of revaluation of property, plant, equipment, because in many financials that is what has been observed. So as per you, so what would be some of the key factors which auditors should consider in assessing and evaluating the risk linked to like especially on the valuation of the or revaluation of the PPE?
It's unmuted. See, basically, a couple of things which I think auditor has to, or the external auditor has to evaluate is first and foremost the expertise and independence of the outside expert who's doing the revaluation of the PPE, or the property, plant, and equipment. So that assessment is very important. That is what the adequate qualification, the experience, competence, what is the past track record which he has done. And again, as earlier pointed by Shweta and all, what are the scope and objectives which have been given to him for the purpose of revaluation? And there are different revaluation methodologies. There could be a replacement cost method. There could be a, I don't know what is it called, the resale. What is the current fair value thereof? So replacement could be different. The fair value of the existing PPE may be different. So what is the scope and objective which has been given to the valuer? Third is the quality, and the answers are similar across whether data which has been given to him is proper or not. And again, after the report comes the assessment of the assumption methods used by the expert. So whether he's used the proper assumptions and methods for the purpose of coming to the revaluation, and review of the valuation models used by him. So these are 4-5 things one has to see. So the answers, whether it's an actuary, whether it's a PPE, There will be some similarity of the principles involved of what external auditor needs to do. But these are, I think, very critical, and the methodology, the models, whether to do with the replacement model or the fair value, the resale, current, what is the value or available. So those are the type of issues I think we need to sort of examine as an external audit perspective.
Yeah, correct. And I think we can also add the lawyers, because for the many times for the contingent liability, the matters that are litigations that are ongoing in case of a client, we do rely on their judgment and their opinions. And I think the similar provisions or I would say parameters would apply for all such experts.
There, let me,
yeah.
One sec, on the lawyers front, I think I want to just give some highlight. I understand that in UK, there's a system where a company can have only one law firm, and they have got a responsibility to give a feedback on the estimation, the liabilities, the possible, probable, or PP, what we do, PPR. So in case of India, unfortunately, a company can appoint any different lawyer for different matters. And many times, I think very essential that the lawyer who's handling the work, he gives the opinion on the liability assessment, not a different lawyer. See, many times what happens just for the purpose of, from the timing perspective, say the existing lawyer is a large firm, busy, and you get this thing. So it is not just, what you call ticking the box. I think, again, their assessment has to be proper. Who's giving, again, criticality of review of the opinion given by or the estimate given by the lawyer based on the facts of the case. I think so. The responsibility of the auditor doesn't go away just because there's an outside, a lawyer's opinion on an estimated liability on a litigation or a claim or whatever. I think so. That I think we need to be again doing our own diligence around that is what I would say as an external auditor. Sorry, I interjected you in between.
No, sir, perfect. I think these deviations and all, because when we that is what in my opening remarks also I said that SA 600 series, especially people say that because there is no consolidation, this whole lot does not apply. But it is so complex, and I believe that when we talk of actuaries and these opinions or judgments with respect to the litigations and all, it's in almost all companies at least, or in the large non-corporates also, that we would come across. In fact, when we talk of the Ind AS, especially on the financial instruments, where in case of private companies, where the fair valuation again has to be done on a regular basis. I think there also there is so much of dependency on the experts. There would be certificates of other chartered accountants also that we might be relying on with. So one is definitely as part of the internal audit. Second might be specifically with respect to where there are borrowings and there is a stock audit by the bank that has been done by a CA, and many times we have seen that the companies or the clients produce that certificate also before us, saying that all the inventories, physical verification, and also all these things are very much interrelated and very important. And I believe that is why we have a huge participation today. Let me be very honest in terms of numbers. For us, I'll be very candid that we have 1,000+ today. And honestly, on this topic, I was a bit hesitant that whether we would have, but I think the people are understanding that almost in every audit, these standards in one way or the other would be applicable. In fact, very interesting.
Vishal, yes. One more thing which you mentioned, I think other thing which came to my mind is the purchase price allocation. Whenever there's an acquisition happening, new acquisition by a company, that is also done by an expert, or between tangible, the fair value, under the Ind AS, this thing. On the tangible, there'll be fair value, and intangibles have to be assessed. Earlier, everything used to get in the old gap, either it was goodwill or a capital reserve. Now, when intangibles have to be measured, whether it's the customer, this thing, list or this, that, or whatever. So I think that's another area where outside experts are being used very frequently. Sorry, I just wanted to add some more flavor to your order. Yeah.
Fair enough. So I'll just now pose a very, I would say, unique interpretation of others that a participant has shared with us. So how much we can depend on others' work in contract audit? So the question is how to know the work done by the audit staff is correct. So, you're like using the work of others, the others becomes the audit staff. So how do you ensure that the work done by the audit staff is correct? Is there any way or process to check accuracy or to check staff's knowledge? Or what is the procedure, sir? Whether we have to depend upon their work or we have to do on our own, as no one else can do it. Please advise. So, yes, I'll start with Biswaranjanji. I saw him.
Bisal bhai, of course, I won't tell specifically the other aspect. There are two aspects. One is staffs, of course, the regular training and proper communication from the top to bottom is the key and the only key to solve this situation. And capacity building cannot be an option to the farms. It has to be a day-to-day core DNA of the farm. And by this, I think probably we can answer this situation. But giving respect to the question and just in a hindsight, trying to understand the perspective of that question, I leave that answer to the institute itself, because I'll be going grossly wrong on that aspect. What I'm apprehending that should be the intention.
No, I agree. So this was just a passing question, but yes, that the audit staff is our responsibility. There is no way out or nothing. If we feel that the staff is not competent enough, or like Biswaranjanji, you rightly mentioned, is not trained enough, then finally I have to do it. I have to do it because ultimately it is my signature that is getting attached to the and finally responsibility would be mine. And that is where like we also said in the beginning at the CAQD, we are also coming out with a lot of tools and utilities by which your dependency on the staff may come down, or even if it is there would be these checks and balances that are built in our Excel sheets, which would give you a dashboard sort of a thing where things have gone wrong or what has gone wrong. Shwetaji, again under 620, how does that standard guide auditors in assessing the appropriateness of management's use of the going concern assumption? A very important thing nowadays that is being spoken around, and especially with the stakeholders, that how does, because going concern again is something where the auditor depends on third-party computations and calculations. So your take on that?
So, Vishalji, there are two standards which get involved over here. One is SS 620, which deals with the usage of the work of expert, and whereas going concerns assumption, evaluation of going concerns assumption gets covered under SA 570. So first we need to build up the relation between how both the standards can be used hands on hands, and then we'll conclude this. So again in SA 620, auditor or the management will engage an expert to assess certain aspects relating to going concern assumption, maybe providing an evaluation of recoverable amount of assets or viability of the management plan to mitigate the threat of the entity's ability. And while SA 570 will guide auditor in evaluating the management's use of going concern assumption and how an entity will continue its operation for the foreseeable future. So the auditor is required to assess whether where there is any material uncertainty related to going concern, and if so, what are the appropriate disclosures which are being guided by FS 570. Now, in this context, if an auditor's expert is engaged to evaluate certain elements relating to the entity's ability, the auditor under 620 need to ensure again that the auditor work is properly integrated into the overall audit procedures. Again, the scope is not limited. They have the ability to do the work. They know what they are doing, and the report is crystal clear. There are no ambiguity in the reportings. So it's very again, it's as all of us have mentioned, that it's very important to maintain the communication and the coordination between the auditor and expert. And all such steps, all such assessments should be documented at each and every step. That effective communication again ensures that the experts' findings are properly understood and integrated and considered in the auditor's assessment. Further, documenting the auditor's understanding of the expert work is a crucial aspect which one should take care of. So SS 620 may explicitly not guide auditors in assessing the appropriateness of the management use of going concern, but both the essays will go into hand in hand while doing this assessment.
Right. Thank you. And I believe, again, when we talk of going concern, there would be these projections and all that would be brought before. And there again, as the auditor, using the work of expert, the auditor would have to again exercise his professional judgment and professional skepticism in, before relying on these projections and numbers, especially when it comes to the going concern. Nilesh bhai, when we include in the auditor's report about using the work of an auditor's expert or a third-party expert or any such thing, how does this inclusion or reference to the auditor's expert in the report contribute to the transparency and credibility of the audit process as well as the final audit opinion?
Vishal, I think basically it should not be part of the audit report, but the notes to accounts, assuming whatever the auditor's expert has been used for, whether it's for PPE, whether it's for impairment testing, whether it's for the actuarial liability, if at all. So if that name is there, the fact remains that the ultimate responsibility is of the statutory auditor, the external auditor who's doing the audit. So he's relying on the work of an expert. So many times say this purchase price allocation. So it helps in improving the credibility, transparency, of the statements. The fact that some outside party who's specialized in a particular area, say actuary, say a person who's doing a PP valuation as a chartered account, we cannot do it. It has been done by a registered valuer, of fixed assets and PP and all. And giving that name improves credibility, improves transparency, and the fact that that person is an expert in the specialized area, it gives better, feedback to the users of the financial statements. But at the same time, doesn't absolve the responsibility of the external auditor to do his task of, as we have discussed enough earlier, the input, the output, of those particular expert opinions. Whether if it is, say, for example, if it is for going concern, whether the projections given are reasonable, rational, and maybe next year again, whether whatever projections have been given have been achieved, if not achieved, whether they have been sort of reduced to that extent or increased to that extent based on the situational change. So I think it's not a static thing. One has to critically review and take it forward and use it. So giving reference is good, but it doesn't absolve the statutory from his responsibility or liability of what he has to do.
Right. And I believe with the more and more complex transactions happening, especially on the financial instruments and those areas, and as chartered accountants or maybe all auditors would not have that in-house expertise to ensure the true and fairness of the accounting also of such transactions, and maybe even independently also the using experts, domain experts or subject matters expert would actually help in the audit process and in the I would say documentation also when any regulatory oversight comes, and definitely with all the checks and balances that our experts have mentioned. But it would also give a lot of confidence to the opinion that the auditor would be having if they actually use the experts where they don't have the domain expertise. Biswaranjan ji,
yes.
In case where the auditor concludes that a modified opinion might be necessary due to the inadequacy of the expert's work, in your view, what considerations should be kept in mind while referencing the auditor's expert in the auditor's report? Okay.
Mr. Bhai, there could be a situation like this. First, need to see of what kind of modification your engagement team is actually suggesting. Is it adverse of opinion? Is it pure qualification? Or is it a disclaimer? Based on the degree of your materiality and pervasiveness, you decide on what is the kind of modification you are actually looking into. And once you freeze on what kind of modification you are looking into, then be clear on what should be the basis of that opinion. And to form on the basis of opinion, you need a lot of digging into the work you have, the evaluation you have gone through or taken care of on the expert's work. And when you refer to the expert per se, because if that modification is relatable to the expert's opinion itself, not on the data set, there could be a situation that you are qualifying the information based on the data set, not of the expert's opinion. Because when you talk about expert's opinion, there are one is data set, one is assumptions methods used in it, and the third is the conclusion what the expert has made to this. So on what aspect you are going for the modification, that has to be clear to you, and in the modification you are going to give in your report. And second, what kind of reference points you are going to draw to the expert's opinion, and be clear on the ethical requirements when you draw to the attention about the expert itself. So whether you are apt on that critical ethical requirements and you have fulfilled those requirements. I think probably these are the factors we should look into when you decide on modifying your opinion on these aspects.
Yeah, just an add-on question to that, Biswaranjanji, that whether in this case before modifying, as required, whether communication with those charged with governance is mandatory.
Of course, yes, because that's the normal process has to be followed in. There could be a difference of perspective because you need to zero on before you take a step of modifying your opinion. So
Right.
Understanding the insights, understanding the perspectives, and explaining why you differ on the expert's opinion or those who are charged with governance, explaining them what is your contention of understanding the situation becomes critical. So that is very important.
Right. So we still do have a bank of questions, but I think we are now almost there. So I would now have the last lap, and maybe first I will start with Shwetaji, and maybe I'll ask the same question to Shwetaji and Biswaranjanji, and then definitely the final judgment, I would say, from Nilesh Bhai, the final words of wisdom, because Nilesh Bhai, one thing we always follow is to stick to the timing for opening as well as closing both, as professionals. So just now winding up to Shwetaji and Biswaranjanji, the question is that considering the increasing complexity of business environments, how can auditors strategically combine the utilization of work performed by internal auditors as per SA 610 and auditors experts in accordance with 620 to strengthen the risk assessment and ensure a more comprehensive audit approach as supported by SA 600?
So Vishalji, I think this question sums up the entire discussion we had in past 2 hours. So the first and utmost important thing which comes into my mind is understanding the business environment in which the entity is operating. We need to evaluate how much we can leverage on the work of internal auditors. Again, that starts with reviewing the scoping, entering into discussion with management on finalization of the scoping, asking them to increase on the coverage and everything. So, of course, understanding of the business environment, and then coming out with a kind of an approach that how much we can leverage, then how much as an external auditor we have to contribute to it. On again utilizing auditors expert, getting involved from the day one, understanding the nature, understanding the complexities involved, understanding the expertise of the other party, and then evaluating our own procedures, what needs to be applied, how much sampling or how much in-depth analysis is required to be done by us. Then integration and the risk assessment is also going to be one of the major factor wherein the findings of the internal auditor or the experts into the overall risk assessment process will help us to mitigate the inherent and control risk, and how their work is going to mitigate the inherent and the existing risk, and how we can plan our work. Again, the communication and the coordination and the documentation are the key elements which, to my mind, are the few of the features which we should consider in the increasing complex business environment.
Yeah, thank you, Shwetaji. Biswaranjanji, your take on this?
See, look, Besal bhai, businesses has to expand, has to grow, and that brings the complexity. That is a very natural way of looking into it. Now the question is how, as an assurance fraternity, we space up to the requirement and challenge. To navigate this issue and have a breeze between the expectation and breeze the expectation gap, I believe communication of expectation is more critical when you use the experts or other auditors work, because the way assurance function is going to grow and the scope is going to grow, it is obvious that we end up utilizing the work of others, be it internal audit or expert or the other auditors. So the communication of expectation has to be very with authority and with clarifying with them. Communication in terms of training to your staff has to be critical second. And third is communication with the data set, because as we think that businesses has to grow and the practice has to grow, these two aspects has to grow on the basis of information. And how we communicate with the information going to be the third element, which I see will pose a challenge, and that's the way we should look into it. So communicating and ensuring the wholesomeness and holisticness of the information is important. And in this aspect, the kind of capacity building you need to do with your engagement teams becomes critical. I think if we cover up these three, then we should be able to space off ourselves with the growing expectations of the stakeholders and business ourselves.
Thank you, Biswaranjan ji. In fact, the same question posed to Shweta ji and Biswaranjan ji, but both gave different insight, very different response. Now, finally, coming to Nilesh bhai, sir, your final words of wisdom, or I would say words of advice to all our professionals, not just relating to the SS600 series, but maybe overall with respect to the complying with the standards on audit, with respect to audit quality, and the especially with the considering the stakeholder expectation. Sir, your final words of wisdom, sir.
Thanks, Vishal, for this. Number one, of course, let me again compliment you the cost of repetition. Fantastic job on audit quality, and I think which you're doing in Center of Audit Quality along with the team. I think the pendulum has swung substantially in a different direction from the time what we are doing, say, maybe before 2018, the audits which we are doing and what we are doing now. The expectation of the regulators is humongous. And even to some extent, if I may say, it may be idealistic, sometimes impractical to some extent. I'm not saying on a full extent. But they are going by the rule book. If I say, if standard of auditing has said something, they are going by line compliance. And we have seen in some of the orders of the regulators that a particular, say, para, which is not applicable to a particular entity, even then they want, whereas there has been documentation. So I think documentation has been very critical. I believe we are going to the other extreme, as I think all of us know what we used to laugh earlier before 2018. Some of the larger firms used to say spend, I'm just exaggerating, 90% time on documentation, 10% on audit, just for getting the message across. And I would say the other firms, maybe 50-50, maybe 70-30, maybe on documentation versus the actual audit. I think the current expectation of the regulators on documentation, what has been done, what audit has been done, has gone to the other extreme. And I hope, I am just praying and hoping that this so much focus on documentation doesn't impact the audit quality, the actual audit which is being done, the time available. And the other challenge I think which I'm seeing is, as per the auditing standards and as per the other pronouncements, we have 60 days time to do the documentation generally. But again, there is certain observation in some orders which say that certain things were done as an afterthought, as a documentation, which may not be completely true. You would have seen something in the course of audit, but you documented later for whatever reason. And maybe because of technology, you can know easily whether it's an Excel file or a Word file, whatever. The date may be different, but that doesn't mean that it has been done later. But that just because the order has come, I think again there'll be a lot of focus to do the documentation before the sign-off date, before the course, which itself is very, very stringent. Despite say 60 days available for listed companies. Some companies do it in 20 days, 30 days, or depending on large entities I'm talking, not small. So this, I think there's some balance has to be required in this particular expectation. I would plead with the regulators and through you, through the WSB, that some, because what is happening is this orders are setting the trend, and there will be consequential action in the audit firms, So the focus, first of all, on the increase of documented what used to last earlier. Now all the firms will be doing it. Forget the larger firms. And when the larger firms itself have been questioned on the level of documentation they have, I don't know what the challenge would be there as far as the other firms are concerned. But I believe that's a huge thing. And to my fellow professionals who are listening to this, my earnest again request is, see, earlier we were like Ayurvedic doctors. Just by looking at the nerves of the patient, he could understand the whole thing. So everything was in our head and nothing was documented just like an Ayurvedic doctor vis-a-vis the client. But that is vis-a-vis regulators, that is not going to be acceptable. Whatever audit you are doing has to be documented. So please focus on documentation. And as I told you, even large firms which were doing huge documents earlier, they themselves are being hauled up for some inadequacies. So it's a long way to go. We need to harness whatever technology tools we have to do this particular, I would say documentation as well as the timing in which the documentation is to be done. I think it's a rat race, which is there vis-a-vis the early completion of audits and then so it's a huge, I would say, and to some extent this is impacting the professionals who want to continue in audit. I'm seeing at the senior level, I'm seeing some, people expressing that why should we continue here with the amount of, so to one extent, I'm slightly sort of worried if I can say so as a past precedent. But I hope some sort of wisdom, semblance, and balancing happens across the expectation of the regulators, because I believe, one or two scans, and I think unfortunately what is happening is the files which they're picking up also are the gross cases. Whether the ILFS, whether it's, I just want to name it, CCD, this and etc. So that should not be sort of tarnishing or jaundicing the eyes. And I would want that we as professional auditors, there should be respect. Maybe something may not be documented, but whether what is the level of the documentation which is not there and to what extent the audit has been done, the quality. I think that again, a lot of people who are doing this particular task are not auditors. They come from different backgrounds from the regulator's perspective. So they may be right in the process. I'm not questioning them. They're reading the rule book, which is a standard of auditing, code of ethics, or the act, and then they're interpreting in that manner, which is a literal interpretation. To that extent, they may be right. But I don't know whether we're getting into bureaucratic, tick the box, one line, yes, no, whether this is done or not. I hope we are not doing that, and our, I would say the professional skepticism, the judgment, and question. I hope that is also not being, questioned. Sometimes we exercise judgment, and in hindsight, the judgment may not prove to be, maybe the right, call, but it's a judgment call. So whether something has been done with a mala fide intention or bona fide intention, I think that also needs to be seen when something is seen in hindsight. It is, my expectation. I hope, I don't think I'm just having a crystal ball gazing in fact what's sort of happening. And again, this I'm talking in the interest of the profession. I think our profession is very important from an economic perspective. And if you want to attract talent, if you want to nurture talent, I think some balancing has to happen as far as these things are concerned. And I'm just wishing and praying that some moderation comes into the regulators from the way they are seeing it, the way with whatever eyes are seeing it. And I wish it should also sort of takes up these matters from AAC, I think, through the president, because we all are part of the sort of the regulators board. And I think it's very, very, very essential, whatever the advocacy is required, to bring in some sort of a balance vis-a-vis the expectations. That's and of course, from the issued side, we are doing a wonderful job as far as building up I would say the quality, the documentation, and the amount of tools which is there. But I think some more time will be required to reach for people to implement these things, because the profession has moved in a certain direction for 5, 6, 7 decades. So now there's a completely directional change. So you cannot have a U-turn immediately on certain expectations. So that's what my hope and expectation is. So that's I just sort of very candidly shared my thoughts. I hope it is not taken for me the interest of the larger economy. Our profession is very critical for the economy, and so that we get good talent within the profession. From that perspective, I have spoken. I hope it is not taken otherwise.
Yeah, thank you, Nilesh bhai, and we wanted you to be candid, and that is why we gave you the last shot, so that you can actually communicate and I would say speak your heart out. So thank you once again, Nilesh bhai, for all your kind words, your presence, your time. Thank you, Biswaranjan ji and Shweta ji, for your I would say candid responses, for your time on this Monday afternoon. And finally, two things based on what Nilesh bhai and our Biswaranjan ji and Shweta ji mentioned. And one thing which I always say is that please put up in your offices one poster saying not documented equal to not done. I think this is one thing which as auditors, all of us must follow, that whatever is not documented, it is as good as that work has not been done. So I think that is one we should start making posters and putting up in our offices and in our audit files and laptops and maybe screensavers and everywhere, just to create that. And another thing I would just request everybody, that those who are on X, that is the erstwhile Twitter, we do have a CAQ handle on that, where we regularly share small I would say creatives or thoughts on audit quality. So I would request you to please follow. It is CAQ_ICAI. Very simple. CAQ_ICAI. You may follow us, and we can keep our interactions on the qualitative aspects of audit live and running. So once again, thanks to all the participants, and I would now request Karuna ji to please propose a formal vote of thanks and close the webinar.
Thank you, sir. So before we conclude this enlightening session, that is our 17th Quality Cafe session, I would like to extend our heartfelt gratitude to all who made today's Quality Cafe session a resounding success. Firstly, a big thank you to our esteemed panelists, our respected past president, sir, CA Nilesh Vikamse, sir, CA Vishwaranjan Sutar ji, and CA Shweta Singhal ji. Your expertise, insights, and engaging discussion have truly enriched our understanding of quality improvement strategies. Your valuable contributions will resonate long after this session. And we are immensely grateful to Vishal sir, convener CAQD, for steering the session and ensuring a smooth flow of discussion. Your guidance and moderation have been valuable in making this session both informative and encouraging. To all the participants, a big thank you for your active participation and thought-provoking questions. Your eagerness to engage and exchange ideas has been the driving force behind the success of this session. A special word of appreciation goes out to CAQD team and technical support. In closing, thank you once again to everyone involved. Your collective efforts have made this session not just informative but truly inspiring. Let's carry forward the insights gained today to further enhance the quality endeavors within us. Thank you. Thank you so much.
Thank you very much. Thank you, Nilesh bhai. Thank you, Shweta ji. Thank you,
Thank you, Vishal, Shweta, Vishwaranjan, and Karuna.
Thank you, sir. Thank you very much.
Thank you so much, sir.
Yeah. Thank you, Karuna ji, and the whole team. Yeah.